All right, so let's begin the show. The economic offence wing of Tamil Nadu Police, which is probing a case registered against Pranav Jewellers for allegedly cheating depositors through a chit fund scheme, issued lookout notices against the owner of the jewellery chain, Madan, and his wife, Kartika, who are reported to be absconding. Now, the firm also announced various ponzi schemes to lure investors with high returns. The accused claim that people who were investing their amounts in gold chits would not be charged wastage on every purchase. It also announced a bonus of every investment. Let's talk more on this. Let's understand what is the kind of scam that we are talking about and what is there in for you as a gold investor. With me, I have Harshvardhan Roongta, CFP Roongta Securities. Harsh, good evening and welcome to the show. Again, a case of Ponzi scheme and chit funds, as we are witnessing. The particular jeweler in concern over here had more than 28 outlets, and the overall money that we are talking about in terms of jewelry is almost more than 100 crores. So they lured investors in giving their old jewelry. They also lured them by promising higher returns. What exactly is the scam all about?
Well, Kavita, with what I'm reading about the details of the scam, so investors were told that you can pay, say, invest 5 lakh of rupees, and there won't be any commission charges. Plus, there would be a 2% interest that would be given, and in 10 months, you would get 106 grams of gold. So that's almost 6.5 lakhs rupees. So basically, an investor was told that you put 5 lakh of rupees, and 10 months later, you will get 6.5 lakhs worth of gold in your hand. So that's like a clear 30% appreciation in just 10 months. So I think, and another thing that you mentioned was that you can give your old jewelry and you get new jewelry of the same amount, of the same value, of the same grammage. So I think, it was just a simple case of taking deposit, buying 10 months time, and as much as you could collect in the next 10 months, they did that and then they simply shut shop. And that's what the police is right now inquiring about.
Harsh, we are talking about a day and age where we have a regulator who's in charge for as far as your gold investment options are concerned, which are very well regulated. In spite of that, people going in for these kind of schemes, and we are talking about the southern part of the country where people believe a lot. As a nation overall, we believe a lot in investing and buying gold a lot, even if it's in the form of jewelry. And even in today's day and age, when people are doing this, where they are becoming a victim of such scams, this shows lack of awareness, and somewhere down the line, there is no literacy when it comes to opting for the right kind of investment instrument, even for an investment instrument like gold, which is so precious and which means a lot.
Yes, sir. Kavita, see, the issue lies where? The issue lies is if you're going and buying gold over the counter and you're taking that gold, the piece of gold back in your hand and coming back, it's an OTC transaction. It's over the counter. Now, the only concern in that transaction you have is the purity of gold. So that you go and buy from a trusted jeweler and then you're satisfied because you have gold in your hand. Now, the question arises when there is a scheme which says that you deposit money today and you will get X amount probably 10 months later or 1 year or 2 years later. There is where the issue arises. And there is where the rate of return, interest, luring investors with higher returns, etc. creeps in. Now, what is important to know is that from an investor point of view as well, you have to be very careful because, if you're investing 5 lakh of rupees in a product like gold and 10 months later, if you're promised 6.5 lakhs, it is certainly not going to be possible. You have to understand where is the person giving this promise going to get this money from? How is that person going to give you 30% more in 10 months' time? So, it's very clear that if a scheme is too good to be true, you must definitely be very cautious and you must ask yourself, how is it possible that a person takes 5 lakh of rupees and 10 months later promises me 106 grams of gold worth approximately say 6.5 lakhs? So if it's not possible, it is most certainly a Ponzi scheme. And then, the investor should not fall for such offers and, be very, very cautious and just back off. I think that's the only thing that is a highlight point. It's too good to be true, not possible. Don't invest in it.
Apart from that, Harsh, the other kind of schemes, that we a lot of times see local jewelers and even big brands, have also come up with these kind of schemes where they ask you to put money every month for 11 months, and then later on the 12th month installment will be given from their end, and later on whatever money is accumulated, you can buy whatever gold you want to. A lot of interest in these kind of schemes we've been seen picking up, over a few years. Do you think these kind of schemes are really worth it? Because if it is only about buying gold jewelry, maybe it could be a very good offer. But apart from that, in terms of investment, from the point of view of an investment, how do you analyze these kind of schemes which are so much in vogue these days, right from local to a very known brands also we see coming up with these kind of schemes?
So, Kavita, the issue that investors should know at first, whichever entity you're dealing with, who is the regulator? So that's the first question you have to ask yourself. Who is regulating? Is it RBI? Is it SEBI? Is it IRDA? Is it any other regulator which is regulating this particular entity? Why? Because if there is a grievance that you have, what is your grievance redressal mechanism? So if there is a regulator, you have a complaint against a bank, you can write to RBI and RBI steps in. If you have a complaint against a market participant, you can write to SEBI. If you have an insurance company, write to IRDA. Now, in cases like this, when you're dealing with a jeweler, there is no regulator per se whom you can go and file a complaint. Your only recourse is that you have to file with the police. And police is a criminal complaint. So there is no regulator. Police is a criminal complaint that you have to file, which takes its own due course. Now the question arises, who is the regulator? What is the grievance redressal mechanism that you have if you have a complaint? And the third is, as I again said, that if the offer is too good to be true, you should be very, very cautious. Is it possible? Now, coming to your question, of several brands are offering this option wherein you pay for 11 months and the 12th month installment is paid by them. But that is essentially for buying jewelry. That is not for buying gold coins. Because gold coins is not it's a low margin business. They don't really make money on selling of gold coins where they can chip in one installment altogether for you. It's basically a piece of jewelry that you buy with that money of 12 months of installment, where 11 months you paid, the 12th month is because it has an option. There is an option where because there is a margin for the jeweler to accommodate that. But in gold coins, there is not going to be enough margin for them to actually chip in one installment out of 12. So you have to be very careful as to what you're getting into. In case you're subscribing to a very, very large brand whom you trust, then probably you can trust with 11 installments and then wait for the 12th installment to buy a piece of jewelry. But that is only in case it's a very, very big, popular, established brand. Then you might want to subscribe to that. However, as far as possible, don't get into anything who does not, any entity which is not regulated.
All right, Harsh, one very important question, because we are also having this discussion at a time, where we are almost in the festive season now. For all those people who buy jewelry, gold jewelry for investment, what is it for them to lose as compared to the investment avenues that we have right now for gold?
So see, jewelry, quite honestly, I wouldn't even consider it as an investment. It is for self-consumption. The reason being, if you're buying jewelry, one, the purity of that is not going to be 24 karat or 22. To make jewelry, you need to have the caratage to be around 18 carats. Only then the jewelry will take form and it will harden to that form to take shape of a jewelry. Secondly, when you go to resell it, in case you consider it to be an investment, so investment means that you should be able to liquidate it as and when you want it. So in case you go to liquidate jewelry, you don't get the price of the jewelry. You get only of the gold content in it, and which then takes away all your making charges, and there are all other kind of expenses that is to be paid. So it net all what you get in your hand, there is I don't think any gain made out of gold jewelry unless the price you bought in the 1970s and 80s and you're selling now, then you'll find a profit. But that's not really a profit in that case because the gold prices have gone up so much. Now, in case you're looking at investment, purely as investment into gold as a commodity that you're investing into. So it does not have to be in the form of jewelry. It will be in the form of a gold in gold coins or e-gold or probably a electronic gold that we're talking about. So sovereign gold bonds is one such option where purely you're betting upon the price of gold going up in the future and you're going to get that benefit without physically owning that gold. So it's very convenient, very tax efficient. So that's one option, of course, that you can invest into. Other than that, it's a festive season, as you said. And in festivals, I mean, in most likely you want the feel of touch and the touch and feel of gold. So you may buy a small piece of gold, probably a 1 gram or something of gold, just for that, that murat thing that you need to have gold in your house. So that from an investment standpoint, it's a lot of for you to have gold in the sovereign gold bonds, which has a lot of other advantages to it.
Also, Harsh, the kind of investment options we are talking about, we're talking about sovereign gold bond, we're talking about digital gold, we're talking about gold funds and gold ETF. There is something, can these be bought online? Also, what is the exact tax implication as far as buying gold from these avenues is concerned?
Okay, so yes, all of these options that we're talking about in non-physical form. So everything which is sovereign gold bonds or gold funds or gold ETFs, etc., will be non-physical gold. So all the gold that you buy in electronic form, it can be bought online. So it's very, very convenient. You can, it's all online through your accounts that you already own through banks. You can buy sovereign gold bonds, as I said, it is from designated post offices, commercial banks, stock exchanges. It's very convenient to buy. If you're talking about gold funds and ETFs, again, on the exchange and through mutual funds. So it's very convenient to buy gold electronically. From a taxation standpoint, let me highlight the sovereign gold bond is one of the most tax efficient investments. Reason being, it's an 8-year bond. If you're investing into a sovereign gold bond and you hold it till maturity, which is 8 years, all the gains that you make is tax free. So imagine a situation that you're investing into gold and you don't have to pay any tax on the profits that you make. And you can't get better than this. So 8 years is the holding period. However, if you sell it before 8 years, then there is a tax implication. So there's a long-term and short-term tax implication. How do you sell it? In the first 5 years, you could sell it on the exchange. It's listed on the exchange, so you can just buy and sell on the exchange. Though it is illiquid, but there is an option to buy and sell. Post 5 years of holding it, you can redeem it back and give it back to the government and get your money back, and that is on the interest on the coupon payment dates. And so that is again an option to sell, or else you wait till 8 years and you get your maturity proceeds, which is tax free. From a taxation standpoint, for the long-term and short-term capital gains, now in case of sovereign gold bonds, they're considered as listed securities under Income Tax Act 242A. Now, what happens as a result of that, if your holding period is less than 12 months, only then it is considered as short-term capital gain. All the gains that you make is added into your income. If its holding period is more than 12 months, then there's long-term capital gains, on which you can, of course, pay 20% with indexation or 10% without indexation. In case of gold funds, they are investing through mutual funds. In gold funds, if your investments are up to 31st March 2023, then the short-term and long-term implications come in, and holding period is 36 months, 3 years. In case you started investing from 1/4/2023, which is 1st April 2023, then irrespective of holding period, all the gains that you make on gold investments are going to be considered as short-term and tax as per your tax slab. So, and in case of physical gold, of course, I mean the holding period being 3 years. So if you're holding less than 3 years, short-term capital gains, long-term is after 3 years. So these are the tax implications. If you notice, as I said, the sovereign gold bonds are very tax efficient. The other advantages, if I may highlight, is that, of course, you don't have any worries about the purity of the gold. You don't have to worry about storage. Where are you going to store it, or if it's going to get lost or stolen? You don't have to worry about all of that. So I think it's one of the most superior, most tax efficient, as you spoke right now. So from an investment standpoint, buy gold in electronic form. And from consumption point of view and the sentimental value or the auspicious festival requirements, you need to buy gold in physical form. There's nothing that you can do about that. But investment, most certainly you can do that in the form of electronic gold.
All right, I think that will be all, and we've covered almost all the aspects of, how crucial it is for you to consider the right kind of investment option as far as gold buying is concerned. Thank you so much, Harsh, for being on the show and helping our viewers with this today. Thank you. All right, on that note, let's take a quick break, but then post that, we'll be having our viewer queries answered by Aditya Shah. But just in case you want to send across your questions related to mutual funds, you can WhatsApp your questions to us. You can also email us your queries, and the WhatsApp number is 865-797-4571. The email ID is themoneyshow@etnow.tv. So a quick break, and post that, we'll answer your mutual fund portfolio related queries.